Welcome traders, I'm Adam Harris, Chief Market Analyst, and let's have a look at the economic calendar for this week coming up. First of all, of course, Monday is a bank holiday. I'd actually forgotten that. So it just hasn't really been much of a summer. If you're in the UK with me as well, it's one of those rare spots in the world that doesn't seem to be on fire right now. And so we've all been complaining about not really having a summer, but in the meantime, I suppose we should be grateful that we don't have such heat issues that everybody else seems to be experiencing. So next up is on a Tuesday, we've got the CB Consumer Confidence. Now, my expectation is that there will be some volatility around the US dollar, and the forecast here for is 100.1. Now, this is slightly down from 100.3, so I want to watch for any significant deviations, which could obviously then impact equities in the US dollar. On Wednesday, we've got crude oil inventories. Now, energy traders, you should take note here, a significant change from the previous draw, and this could move oil prices and currencies tied to oil, such as the Canadian dollar. On Thursday, GDP, this is a big one. The forecast is 2.8%. Any deviation could lead to strong moves in the US dollar and set the tone for broader market sentiment. Then we've got the initial jobless claims forecasted at 232,000. All right, so this data could, will give insights into the US labor market, and significant changes or surprises could obviously then impact Fed policy expectations. Now, on Friday, we've got the CPI year on year. Now, inflation is expected at 2.3%, down from 2.6%. A lower number could obviously weaken the euro. And then, of course, we've got the core PCE index year on year. Now, this is the Fed's preferred inflation measure. So I want to watch these numbers closely because they could obviously influence the next move in the US interest rates. And so the key takeaways for most of you will be to expect some volatility, especially around GDP and core PCE data, and sort of prepare for potential breakouts in dollar pairs as well as oil. So manage your risk. Obviously, use trading stops to protect those profits during these sort of high impact news events. So moving on to the chart, let's have a look at the VIX. And so you can see here volatility has dropped right down. Quite interesting to see. This is almost a gravestone doji in terms of that kind of complete collapse and right down back to its entry back into this area where it's been previously. Just, you know, I think historically that is a relatively rare event, and I kind of just want to take note of that. Could be a swan of some sorts, but we won't really know until later on. So, but right now, point being is that volatility has come back down to within sort of normal ranges. Now, having a look at the dollar index, we are now down towards the bottom, the lower end of this range. And one of the things that I do kind of want to mention here is that the Federal Reserve Chair, Jerome Powell, did hint at a shift during his speech kind of in the Jackson Hole Economic Symposium, which was on August 23rd this year, stating that the time has come for rate cuts. And this has created an expectation in the markets, obviously, that the Fed could then reduce rates in its next meeting. And so what is that likely to do? Lower rate is likely to weaken a currency. So the dollar is, I mean, there's been some expectation built into the markets where they've been expecting actually a rate cut around about this time. And the reason for that is historically there tends to be a certain amount of time that passes from the last rate hike to the first rate cut. Not really because, remember, the whole reason for a rate cut is to stimulate the economy, and the economy hasn't really required it up until now. But this is one of the things that is now potentially on the table. And in anticipation of that, we've seen that weaker dollar. So the big question this week is going to be, will we head further down to really test these lows here at the bottom? Let's do it on the weekly. It's a much clearer chart. Down to test towards these historic lows and bounce back up and stay within the range? Or are we actually going to see a bit of a follow through and see that dollar continue to weaken and actually break outside of this range and continue to head down? I wouldn't really consider it out of that range until we've really successfully kind of really worked our way past the lows over here and we close outside of that. We've had an attempted breakouts in the past. We'll see. So that's something that I'm going to have a look at. We are near the bottom of the range, and therefore a reversal this week or a big move up or rejection of those lows is just as likely. This is what happens when you get to the edges of a range, and you can clearly see that's where we are. So this week, the question is, will we get that, or will we see a continuation and a breakout? Usually after you've had a really long run towards a particular level, you usually get some form of a reaction against that. The only problem is that the edge of this is particularly tricky to define. We could still go a little bit further, could work our way down right to the nice round number of 100 and then have a reaction back from that. So that is a very fair possibility, and I will be sort of incorporating that into my trading plan. Okay, moving on to euro against the dollar. You can see it's a little bit overextended on the daily, a little bit overextended on the weekly. We've clearly broken outside of this. So let me just clean that up. There we go, much cleaner. You can see we're now working our way up to this level of resistance by the previous highs. Could we go any further? Of course we could. We could continue up, but I would say at this point now, it would be relatively common to have some form of a reaction. And again, we might find ourselves going up a little bit high, a little bit higher, and then getting a bit of a rejection, and possibly this week experiencing a pullback, and then possibly working our way back up to the highs. Okay, so that looking good. So my expectation, at least retracements aside, would be a continuation to the upside there. The same with cable. Cable is even more overextended. Cable has, over the last couple of months, been stronger than the euro, and I would expect an even bigger, it's also possibly going to continue up and then a correction at some point. Aussie dollar, same thing, working its way up to the top of its range. Could we see a reaction there? We'll have to find out. We've got Kiwi dollar also approaching these previous highs over here, and also got some good room to head up to the top of its range. So let me just mark that off, so that is a little bit more visible within this monthly chart. So you can see that that's got some potential to go to the upside there. Let's have a look at dollar yen. So dollar yen continuing to go down. So I think last week I spoke about the idea that we know the Bank of Japan actually does want to change this. They've been talking about 150 being their upper limit for a while, and we could see that change is now starting to reflect itself. So for the time being, my expectation is that dollar yen will continue to the downside. At least that is, we know that it's going to happen in the future. What I mean by that is that in the past, when the Bank of Japan has determined it wants to change the direction in which dollar yen is going, it has always succeeded, no matter how long it took. And so we know that the question is, at some point in the future, this is definitely going to continue down until it's back within a price range that they find they're quite happy with. The only question then is it going to be happening now, or at some point over the next, 2 months to 6 months to next year? And now it appears as though certainly the pressure is taking place, and it needs to basically discourage the rest of the market from engaging in buying dollar yen to the upside and switching sides. So right now, technically, it is looking more bearish than bullish. We've got dollar Swissy following through as well. So you can see how much the dollar this week has really shaped all of the majors. We've got, Euro, GBP, Aussie, Kiwi going up, and dollar yen, dollar Swissy. And if we have a look at dollar CAD heading down. And so we can also get rid of this range over here. So we can see there's been basically a consolidation. The dollar has been doing most of the driving this last week, and we can see how much it has shown. Now, interesting here, looking at dollar CAD, we're stuck within a range. So again, worthwhile identifying this range, and you can see that we're just at the top of the range. We could very well find ourselves going back to the bottom of the range with dollar CAD as well. So just showing how much potential downside there is for the dollar with some of these major pairs. All right, moving on to gold. So gold overall continues to tick high. We've got a bullish setup here right near a level of resistance. We're through this danger zone that I've marked, so let's just get rid of that. And we're outside of this range, so we can actually get rid of that as well. And now it's really just a question of, can it just continue to keep going a little bit higher? We've still got a little bit of bearish divergence, starting to turn bullish here. The monthly just continues to tick higher. So for now, this is what I said last week as well. Although I am convinced that monthly is due for a bit of a correction, the daily and the weekly are very, very happy. This is a really nice break and a retest, showing some potential here for this to continue to the upside. So that looks pretty good, and therefore this could be a possible buy opportunity. Is it overextended? Yes, I believe it is. The weekly doesn't look so bad. Daily doesn't look so bad, but the monthly is. So the point being here is that we could still continue for a while before we do eventually get that correction. Possibly here the market is now at 2,511. It might be wanting to go up possibly to, let's say, 2,6, and then we'll see how it reacts. Or if it fails this week, if it breaks the low of this weekly candle, we'll get a bit of our correction now, find our way back down to 2,4, and then continue up from there. Silver looking really good here. Silver's looking very bullish. That's a really nice bullish monthly candle. Let's mark that. We're not, we've got the final week to go, so this could change shape, but definitely worth keeping an eye out, because this could be a very straightforward bullish signal. We've got some resistance up ahead, but that is a relatively strong, clear bull signal. We need to see how that ultimately finishes. That's what's quite important. And again, if we do get a reversal of some sorts with that US dollar this week, we could see that impact gold. All right, let's have a quick look at natural gas just to see if that's heading higher. Nope, continues to maintain its bearish move to the downside. So many commodities have headed low. I actually did write a piece on, there's only about 5 commodities out of all the ones I could see that have headed higher, which included, gold and silver. I think it was cocoa, lean hogs, something like that. The rest have all headed down. So that tended, across all of the futures markets, tended to find that commodities tended to head lower. Let's have a look at light crude. I beg your pardon. Let's go to light crude. Still stuck within this little range. Nothing yet. There's lots of talk about the fact that the expectation that this will head lower is a possibility, but that's anecdotal. and it's leaning on fundamentals, not technicals. Just mentioning that here. West Texas, same thing. No real difference here. Stuck in a relatively tight range, and we'll have to see how that ultimately plays out. Okay, let's have a quick look at sugar. Yeah, sugar also overall historically, you can see recently it's done well. I mean, when I say recently, going back to 2020, but we can see we're sitting with a really large correction, and so that's headed down. It's trying to turn around here. We've got bullish divergence, lots of bullish candles. It's trying to turn around here, but just wanted to give you a quick look at other commodities. Now, moving on to the global indices, relatively strong recovery last week. They continue to push higher. So I've spoken, and I've spoken at length, obviously, about whether I need to be cautious for a September, bearish September. It's a possibility. Maybe the exception to that is that we're in an election year, and so the markets are continuing to push higher with the expectation that the current administration, or at least the Democrats, are going to maintain or retain their position, or will be voted back in. There's a lot of disinformation out there, so be aware that the majority of the disinformation, for example, the Russian disinformation campaigns and stuff, support the idea that the right conservative party is the right-wing conservative party, or let's say the far-right conservative party is going to maintain power. But as you've seen across the globe, for the most part, we've seen most right-wing conservative parties fail when it comes to elections. We've seen that left-leaning and centrist and moderate parties tended to retain power. So statistically, the probabilities, as well as historically, the incumbent tends to have the better odds. So it appears, it's quite interesting, but it looks as though it's going to be a tight race. It's going to be a close race. It's interesting because obviously when you speak to people on the right, they're absolutely convinced it's a shoo-in that Trump will become the US president. But you have to keep in mind that the majority of that information, there's so much misinformation and disinformation on that side. There's way more produced from the right, like pretty much most of the disinformation out there, the majority of it, not all of it, but 90+% of it is produced by the right conservative side. So you just have to take that into account. Whereas a lot of other new data is looking way better than 2020 for the Democrats, and therefore, in my opinion, the Democrats it's going to be a landslide. Although they keep saying it's going to be close, you could get some surprises, which of course you could. I'm of the opinion that it's going to be historic, and that it's going to be what they call a blue tsunami. And we'll see. It's going to be interesting. We're not that far away. We're a few months away from it, and it's a big, big thing. Okay, so it's interesting because why I say that with regards to what we're doing here is because it's interesting. If the market is already pricing that in, they would then expect a continuation of the last few years where the market has just been climbing, 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 and that it would continue to go up. That's why. That's the only reason I mentioned that. Okay, so we'll see if that's going to be the case. S&P right now also. Remember I was saying that we would be looking for a bit of a pullback. We've had very little here. I would still have expected a pullback down at least towards the 10 and 20, down towards maybe 5,500. We haven't had it yet. We're still overextended to the upside. You can see a bit of a consolidation here. It's very keen to keep going. NASDAQ as well, very small correction, way smaller than I would have expected, but it also looks as though it wants to keep going, so this could be a potential buy opportunity here. I'd have preferred a deeper correction, but it looks as though this correction is it, and it wants to keep going. Russell, so the Russell's broken to the upside here. It's really keen on getting outside of its range, so I had a range that I've drawn in here. It's very keen to get outside of that. We are at a bull market, so that's not really a surprise. The FTSE itself as well, finishing a little bit higher towards the end of the week. Also maintaining its bullishness, sitting near a level of resistance when you look at it from a monthly basis, but also looking pretty good. We've got the DAX. The DAX also looking very nice, coming up to those all-time highs, but looking nice and bullish. Straight up, look at just the size of that move straight up. Any kind of a pullback for me would be a decent buy opportunity. I think we might get a reaction off those highs, knocking it back a bit. ASX continues to look bullish, so the markets are very optimistic at the moment. Same thing here as well, even with the Nikkei also pushing back, continue to push to the upside there. Let's move on to equities of interest. Anheuser-Busch, just very choppy chart, but still looking more bullish than bearish. We've got Apple, also same thing, continuing to look nice and bullish there. Amazon, battling a little bit here with this 20-period moving average because it's trying to decide if it's going to do a bit of a correction. Overall, though, I think it had a decent pullback into this area. Let's see if it could continue up. So I'd be watching this weekly candle to see if we break the high first or the low first. We've got AT&T continues to trickle up. Looks pretty good. Looks very happy over here. Nice little breakout there. So that looks good. So far, so bullish. Let's look at ARC. ARC pushing back up towards the top of its range. All right, cool. That's fine. Nothing amazing there, but still. ASML. Again, a little bit like Amazon here, where it's trying to determine what it's going to do, but overall it still looks nice and bullish, and it had a decent correction there. Glencore stuck within its range over here on the low side. I was looking to see if we'd get a bit of a bounce off that. So far we have, but we're still sitting at the bottom of that range. There was a breakout, so let's just correct this, and let's just bring this down to, that's probably a more, or if we just want to put it there, it's a more honest representation of it. There's an inner range here, so you often get an inner range and a central axis and an outer range. We're sitting here at the edges of that inner range. Tesco looking really insanely bullish. Look at that. And it's just such a great quality kind of setup. Any pullback here would be a good buying opportunity. There's one here I actually missed. That was a no-brainer. But I do miss them sometimes. I just am not at my desk, or I don't do a scan, or I get distracted. This also continues to look good. I had some concerns about that bearish divergence. Looks like it's working its way out. I would have preferred a correction further down. Still looks good. So that's Amex. Berkshire Hathaway is on fire. That looks really good. Coca-Cola looks really good. Very happy. Look at the shape of these candles going from smaller to bigger to bigger to bigger as it gains that kind of momentum. At some point, we're going to have to get smaller candles again, and then a bit of a correction. BP at the bottom of its range now, so this is range bound. I should actually mark that so that we can all see that. Let me do that, and then we'll see if it can break out of its range to the upside. So let's just do that. There we go, and then mark that. So let's see what happens there. Exxon really at the top of its range. I think we might see of the two. I would expect Exxon to break out to the upside there. Estee Lauder, no real change over here. This is one of my losers. General Motors continue. Pretty nice bullish engulfing, not engulfing candles. Sorry, I beg your pardon. Closing near the highs there. I really like that. Very nice and bullish. Okay, we've got JP Morgan Chase also continuing to look really nice and bullish. Really good so far, guys. Triple Q looks really good. We've got Adidas wobbling a little bit here, but looks okay over there. I quite like that. I think we'll see a bit of a push to the upside there. This is what's known as a megaphone pattern. I'm just going to mark it this way. When you kind of get higher highs on the one side and then sort of lower highs on the other side, it's a megaphone pattern. It's rare to see it. Doesn't really mean, at this point in time, I'm not too concerned about that. We'll see if it pushes up. If everything else stays up, it should stay up as well. Meta also continue to just test those upper limits. There we go, moving on. Morgan Stanley also looking all right at this time. I like, again, I've said it before, but I really like the fact that it retested that resistance. That's a pretty good sign. We've got NVIDIA also looking very nice and bullish. You know, I'm not sure what any of your thoughts on this are, but it does feel to me to be parabolic, and therefore at some point I would expect a deeper correction. The question really is when. Could it be in the next, it could be in the next couple of years. But yeah, at some point I do expect a deeper correction, sort of much closer down towards these, well, back down towards that 50 period. And again, that could be a couple of years away, so there's no point in stressing about it at this time. It's still a bull market, and even then, that correction could just be a correction, just like we've had now, just a bigger one, rather than, you know, it would be 2-3 months instead of 18 months. Okay, Netflix continues to test those upper resistance levels, still looks nice and bullish. PayPal, there we go. So that is a nice bullish sign. And look at that, consolidation, and it's broken out of that. That is good. It's a very good sign, and interesting how that ended up being a little bit of a double bottom. But what I like about it the most is probably this look here. We're now in an uptrend on the monthly. We haven't had that for a while. So in an uptrend on the monthly, that could be, I don't know what the upside potential is here, but this is a buy opportunity. So the question is, I just don't know if it's going to get up to the highs, but it could be something of interest. Interesting to me, and we're above the 50 period. Look at how beautiful this is. Actually broke above it, retested it, and headed off. That looks really good. So PayPal, there we go. So if you've been following me for a while, you know that I haven't had much hope for PayPal. This is now something I would consider bullish. The only thing that I am not sure of is how much upside potential there is. There might be very little. It might take years to just get up here to these previous highs, or it could soar all the way to the top. I'm not sure how. Spotify looks fine. It's got some resistance where it's battling at this level, at that 342 level. Overall, still continues to look healthy. Definitely Spider here, also looking good. Very happy with that. Really nice and healthy. FedEx also looking very good. Beautiful pullback into this area. Really nice bullish move, continuation to the upside. Tesla continues to sort of trickle its way to the upside here. It doesn't really have, it is in an uptrend on the weekly, and obviously it's working its way through this kind of triangular shape, pinching here, pin and shape, but it continues to look more bullish than bearish at this time. We've got Vanguard, continues to look bullish as well. And then we finish off with Disney. Disney should start to recover. If everything else is looking that good, it should start to recover. So, in fact, you know what I'm just going to do is get rid of that. And I would expect it to find some support in this area and then start to work its way back up to the top of the range. Let's see if it does. And then we've got bonds. As I spoke about last week, I think bonds could be something on the table. This is looking very nice towards a breakout pattern. So let me draw this in. I'll just use these arrows to do it. Looks as though we've got a nice breakout pattern forming here. We'll just extend that like that, and then we'll just do this. But this could be something of interest here. So potential breakout to the upside. Could be something that's going to happen. So I quite like the look of that. And then we've got Eurobonds, which is also looking nice and bullish. This is a consolidation at the moment. This could be a very nice little buy opportunity here. So buy opportunity here, stop loss below the lows over here, bottom of the range. And if it does ultimately consolidate and break out, then you get in at a really nice sweet spot, which would also be a bit of a swing low here. It's waiting for the moving averages to catch up, but looking okay there. That could be something worthwhile. But I do think it's possible we might get another retest or two, so I want to make sure my stop loss is a little bit wider, but not looking so bad. Right, cryptos, guys. So cryptos will, of course, start to look more bullish. If everything else is looking bullish, we'll see that. So this kind of move up the last week isn't really a surprise to me. We had a really good correction, similar to others. The question is, that's Bitcoin. How did Ethereum do? Ethereum also here. So it's got to really break through this level of support. If it's got to obviously not ideally find resistance there. This was a prior shape. So that was this original series of lower highs. We broke out to the downside, tested the level. Now price is coming back up. So we can get rid of that. We don't need that anymore. We don't need that anymore. We don't need that anymore. And overall, this is a relatively nice correction. So I would, what would be amazing, I think, this week is to see a break and a close, or a continuation and a close up above here, if we're going to get that. Now, we've got Binance also looking good. It's broken through the downward sloping trend line. So that is now also it's got some strong resistance here, but looks very nice and bullish. Solana also looking pretty decent here at the bottom of this consolidation, working its way up to the top. So that should continue up, and then finishing off with Cardano, which has kind of finally started to, well, appears to be turning around here in this area. The big thing for me would be a break and a close above that 50-period moving average would be enough of a sentiment shift that I would expect it now to continue. But it's starting to look good, and it's also likely to follow through as the others have. So there we go, ladies and gentlemen. There's plenty to have a look at in terms of trading opportunities. Markets are generally looking really nice and bullish at this time. We're a couple of weeks away from September, but we might have an exception to that. And the only reason I can sort of offhand think about that might be the lower rates. Obviously, if we're going to get that combined with maybe the US election, which makes this year maybe an exception. But we will see until I have to, I'm just going to be cautious until we get through past that November point. And that's it from me. Expecting a weaker dollar, but we could see a reversal this week at key levels. We'll see. We're in an area now where that dollar could reverse at some point in the sort of foreseeable future. But even the rate cuts would actually imply it continues heading lower. It is due for at least a decent retracement before it continues down. I'll leave you with that. Thank you. Trade safely. Obviously, manage your risk appropriately. Thank you.